Mark, let me start with precious metals because we see gold and silver prices both down by around 6% right now on my Bloomberg screen. I mean, does this strike you as interesting, a continuation really of what we already knew about the role that gold and silver were playing in this particular war, in this particular crisis? But I guess it's interesting that this is happening once again, another Monday where this is the knee-jerk reaction.
Yeah, good morning, Anna. We're certainly seeing some short-term capitulation-type price action in precious metals and some other assets out there. I don't think that this is the low, though. You know, as we've discussed a lot over the last couple of weeks, this should be a very negative environment for gold. All the marginal factors switched at the start of this month. We've got a stronger dollar, we've got higher yields, and if you're buying gold on the risk of a war in the Middle East, well, you got your war at the start of the month, and therefore it's time to pat yourself on the back and take profit. So all those things are playing out right now. There's no further escalation that you can reasonably bet on without something that's completely doom-mongery for humanity. So I think that, gold should continue to decline. Now, very short term, this action looks like we've done a lot of the short-term stop losses. But I wouldn't be surprised if over the coming weeks, if the conflict continues, that we have another 10% or so downside.
Mark, what about this argument that you could see a comeback for gold when the sell the winners phenomenon is over and done with?
Well, I think gold has been selling off because of that dynamic, because the idea that, it's somewhere where people have made a lot of money. You got to remember that gold, while it's off whatever, $1,300 or $1,400 from the highs, it's still up about, $700 or more from where it was a year ago. I don't have the exact kind of rates in front of me. So it's still up over the last year. And that's the dynamic which is kind of driving this, that basically we are seeing just general deleveraging in the market. People are having to sell down their winners to pay for losers. And I think that's what's been driving gold at the moment. Probably after we get through the crisis and dollar starts declining again and yields start softening again, people will get back on gold. Ultimately, the long-term desire to seek alternatives to the dollar and fiat currencies is probably still valid. It's just we won't return to that until the conflict is over.
Let me ask you about stocks then, Mark, because we are 12 minutes away here from a European equity session that looks as if it's going to be pretty negative. European futures down by 1.8% right now. The Xetra DAX, as it often does, could take the worst of that. But that's not necessarily the end of it, because US futures also pointing a little bit lower. This is starting out to be a negative session, negative week for stocks.
Yeah, look, we're having the worst month for global stocks in 3.5 years by some distance now. It's a pretty bleak month. Unfortunately, my view hasn't really changed. The last few weeks, I keep on saying it's bad, it's going to get worse, and I still think that's the case. As I said, it does feel like short term there's been a little bit of capitulation, so I have no particularly strong view in the next 24 hours. But the market is still positioned very optimistically despite the sell-off. There is still a belief that the conflict will end soon, the strait will open up soon. I'm not going to tell people what's going to happen in the conflict. I don't think anyone's got a clue, including Donald Trump. So therefore, I don't know how anyone has conviction about it. What I do know is the asymmetric setup is for much more declines to come. To be contrarian right now is to stay being bearish even after these sell-offs.